All right, shortened week, and we're coming to the end of the month. So I'm going to cheat a little here with you guys. And we're going to look at monthly candles. We're going to look at what's happening this particular month in the markets, in crypto, and in the entire market. And this, to me, is very important. I am a quant. So what happens over at StatsEdge Trading, if you're interested in come joining us and you want StatsEdge Pro, I build systems and I build models and I backtest those for 25 years and I refine them and I use machine learning and all kinds of cool stuff to build models to say, hey, if you buy this stock here, there's a 60% chance it's higher in a week and a 40% chance it's lower, and this is the rules around it and all that stuff. And it's all super cool. Doing that sometimes gets me really caught up in kind of the weeds and just really kind of focusing on the trees and not so much the forest. So although come next week, I'm going to do the same thing that I send out to the StatsEdge Pro members when it comes for our trading, the difference and kind of the profound difference is that when I take a second to stand back and zoom out and look at what the market is doing, it becomes way better for me personally to be able to take these trades without bias, because I'm hearing a lot of, hey, this is the market super concentrated right now, and this is the reason it should be a bear market, and that's the reason it should be a bear market. Whatever it is, who cares? Zooming out on long-term charts is kind of what helps me keep centered and keep objective and actually seeing what's on the market. So that's what we're going to do here today. I say that, and then I come up to a 5-minute chart. But what I wanted to show you is this is what has happened so far this week. And if we look at this on a daily chart to get started, we crashed down, quote unquote crash. Everyone was talking about, this is the end of the world. I forget what the reason was this time, but it's always something, right? We had the great cooking oil crisis back here. We can do the SPY instead of, right? The great cooking oil crisis happened back here. Who knows what it was this time, but something horrible. Government shutdown or NVIDIA or whatever the excuse is. And now we're just back above that and just absolutely ripping in the market. So zooming out to the monthly chart, this should kind of level set. And people look at this and say, okay, yes, we're up 6 months in a row. We kind of needed that down month. Maybe we need a nice healthy pullback in order to get started. And then I just zoom out, or I just go back a little bit. 1, 2, 3, 4, 5 months in a row. One kind of inside red do nothing month, and then off to another 6 months in a row. If we go back here before the last bear market, this is 2020. We had 5 months up in a row, a little bit of sideways action, another year up in a row. So this is not rare. This is actually the norm. If you go back here, we had 5, 6 months up in a row, one kind of do nothing inside month, and then another year or so up in a row. So I look at this and I say, this is pretty perfect price action, that we have a little bit of pullbacks intra months. Each of these months we're kind of spooking people out, and now we're back to it. I wouldn't be mad at all to see another inside month or some sideways chop. I think it is healthy for the market to consolidate gains, but it doesn't have to do it, right? I just showed you a bunch of examples of where we continued up fine. And yes, eventually a bear market comes, but each bear market so far is above the bear market before it. So when that bear market comes, that's okay, because it will probably not be going down to this low right here, right? We make sure that we just continue strong. Now, what about that concentration risk that everyone says? Well, the S&P 500 is about 30% tech, and of that, a lot of that is the AI players, your NVIDIAs and Googles and Microsofts and Metas, the names we all know. Well, we can zoom out and look at that as well. That's kind of the theme today of let's be objective about things. Let's ignore the news and all the stuff that we get caught up, the memes that I like to do all the time. Let's ignore all of that and zoom out. Well, here is the RSP. So for those who don't know, the S&P 500 is cap weighted. So it means the bigger the company, the more of an effect it has on the S&P 500. So NVIDIA is going to have a massive effect on the S&P 500, whereas, I don't know, Crocs part of the S&P 500? Some small company is not going to have nearly as much of an effect. This RSP, this is equally weighted. So every company has the exact same effect, right? Every company has the exact same effect as the company before it. And that's hitting new highs. So this represents the average stock, and the average stock is doing just fine. Just making a nice little break here as we speak, closing at month's highs and a green candle. Had a little pullback, and now we're doing great. IWM, which is small caps, there's 2,000 names in this company, so it's not going to have the concentration problem either. Also at highs, all-time closing highs, assuming, right? I'm cheating. There's a half day on Friday. I'm cheating, but assuming we close right here and nothing disastrous happens, that's looking great as well at all-time closing highs for the IWM. So across the board, we're not seeing this concentration risk. Another good example is just look at the XLV chart. This is healthcare. Just insanity. New all-time closing highs for healthcare as well, barring some craziness on Friday. So everything across the board is looking great, not just the big cap tech. So anyone tells you that there's the big cap tech is the only thing leading us, show them this video, show them this chart, say it's just mathematically and objectively not a true statement. The only thing that I'm kind of looking at here is Bitcoin. So Bitcoin, crypto in general, right? You can see the same thing with Ethereum, and you can see the same thing with Solana. But let's just use Bitcoin as the proxy for the crypto market. This one's pulling back a bit and way worse than what's happening before. However, I just showed you charts that had 5-6 months up in a row in the equity space, and this is the last 4 months in Bitcoin before the fall down. There was absolutely no progress forward in the Bitcoin market. So I'm just wondering, there's two schools of thought here. One is that crypto is just becoming uncorrelated to the markets. It's just going to do its own thing. That's more or less what I'm trying to lean towards now. The other is this is some sort of dark canary in the coal mine, and we should all be incredibly worried and yada, 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 blah, blah. I'm less worried about that just because if that's true, then it's like 6 months early. I don't think there's anything in the market that's going to be reliably 6 months early. And we could look back, the stock market could crash and we could say, hey, Bitcoin could have showed it to us. But until it does it a number of times, I just don't think you can look at something and say, hey, there's this massive leading indicator that no one's ever discovered that exists. So Bitcoin is kind of the only big, this one's a little bit scary this month. Everything else seems to be doing fine. You can look at financials, they're holding fine. Tech, obviously, XLK. Tech, right, is obviously your laggard here across everything with, XLV. And real estate, right, home builders, or that's defense. Home builders doing strong. Tons of different sectors across the world are starting to pick up the torch and carry it forward. So I think it's good. I think the flush that we may have had this month was good. It kind of shook the trees a bit, moved money from one part of the market to the other, which is exactly what you want to see as a bull market. And until something tells me otherwise, we're looking good here. Again, I will do whatever the systems tell me to do because that's how I trade. But it's good to have an overall sense of where the market is, where it could potentially be going, and to do this step back. So I don't care if you're a day trader, if you're a short-term swing trader, however it is you like to trade, take a little bit every month, build up a big list of ETFs, and just once a month, load up a monthly chart, zoom out a bit, and go through them. It's very much a kind of level setting exercise for me and says, okay, regardless of what the news is saying, even regardless of some intraday volatility and some daily chart volatility that we've been seeing, on a monthly chart, we look fine. We took a rest month. Looks like we are poised to continue. This could age poorly. I don't know. Things change obviously every day, but no real warning signs other than that crypto that I can currently see. Now, happy Thanksgiving to all you Americans out there. If you want to start your new year or after Thanksgiving trading with a statistical edge, right? Something that you can point your finger to and say, hey, I'm taking this trade not because a squiggly line crossed another squiggly line and not because some guy on the internet told me to, but here is the back test on my website on StatsEdgeTrading. You can see the back test for all the symbols. All the years. There's 25 years worth of data for every single strategy we run. You can take a look at all of those and watch a little video of what each algorithm is attempting to do. You can see all that over there. It very much is a game changer for me when I became more quantitative and statistical about my trading, in the sense that, again, on Friday, I'm going to hit a button and it's going to tell me what to do next week. Then I just have to wait for those triggers to be hit and then make the decision on the fly whether or not I'm actually going to take the signal or not. But I'm no longer hunting and looking out there. If you're interested in that, come join us. Have a amazing Thanksgiving, right? Don't do anything crazy. I don't know what you guys get up to down there, but don't do anything I wouldn't do. Have fun with your friends and family. And until I talk to you guys next week, get away from the screens.